In the last 2 days, Bitcoin has pumped over 5.4%. And some would say that's not necessarily a mega pump, but considering where we currently sit in the cycle, this is very significant, especially as many investors have been capitulating at the bottom yet again, waiting on lower prices. Let's take a look at how that has unfolded for BTC, where we expect it going next, and what is happening in the traditional markets, as this is giving us a lot of clues as to what to expect next. You guys know what to do. Hit that like and subscribe. 3 out of 10 still aren't subscribed. We are well on our way to 290,000. So thanks again for all of your support from our regular viewers, especially hitting up that like and let me knowing your thoughts in the comment section. Now, just a quick one, top of the video description is the World Series of Trading, our crypto trading squad here. It is called the top 1%. It's called the top 1% for very good reason. We are in the top 1% of traders in the world. There is 857 teams. There is 80,000 traders. Our team here, top 1%, you can see our logo right there. We are number 7 in the world. So if you want to join us in trading, being part of the top 1%, use that link right here, the Bybit link there. That is your affiliate link. Yes, it's a shill link, but if you want to be part of the top 1%, that is the place to go. Trading isn't for everyone, so make sure it is part of your own strategy and something that you want to do. Now, if you do use that link, you will have access to free trading workshops coming up in the future to help you be a better trader. Once you've done that, that is the link at the top of the description for the trading squad. More on that later, especially with many of our traders doing great profits here, 80%, 190%. We've got 18%, 15%, 200%, 69%, and 93% just this morning. So well done to all you guys. We are in the top 1% in the world, not only in the name, but especially in the world here. So great work. All right, very, very proud of you guys. Onto the data for today. We're looking at what's happening in the markets for August, September, as we've seen the peak in July and what we can expect throughout Q3 into Q4. So following on from the data that we have been producing here on the channel as we study the past to forecast the future. You guys know the deal by now. So the thing that we note here, looking at the data, going back to 1928, that is 95 years. Typically, we get a July peak, then we get what Seth is calling a chop and slop through August and September. You can see if I draw my line up here, my wonky line, there's August, there is September, and then we get into roughly October there. You can see that this is pretty much chop and slop, but we are more, we're wanting to know more about the trend rather than the levels themselves. So people are wondering, are we going to collapse in the market? Focus on the trend. And I want to show you some targets here for where we think that low might go based again on that data. So once we can piece together what the cycle typically does, remember that is our forte here. We study the past to forecast the future, and we focus a lot on cycles because that is about the timing of the market, the thing that most think can't happen, but that's the only thing that we can actually forecast in the market. The price is, I think, one of the more trickier things, whereas the timing, that is the thing that we get right here. Okay, so what happens in the market August, September, October, November? You can see that the market starts to take off somewhere in late November to early December from those low periods. Maybe we test the bottom here of August, maybe we overshoot it a little bit in September, maybe October. Remember, we did have the cycle low in October of 2022, and we had another significant low in September of 2022 as well. So it's all sort of working towards this this cycle as well, especially when we go back 95 years of data here on the SP500, and this is the composite for 2023. So this is just suggesting that from the July peak, we have some tests to the downside, some tests to the upside, back testing to the downside. And you can see it doesn't really break down too much before we get a leg on, a move on in Q4 through probably the later half of November into December. That's for the S&P. So what does that look like on the chart here? And what does this mean for Bitcoin as well, as we start to see some of the volatility play out for BTC just in the last couple of days, some of those tests to the downside as we anticipated here, using the 50%, looking at that price target of around $28,300. Will we test that again? That's the thing that we're looking at here. So for the S&P, what we have covered many times on the channel before is with a pullback, probably around that August or September, but mostly the thing we've covered is the percentage drop whenever we do get that pullback. One of the things we noted was that the market was up for 16 weeks from the cycle low. Remember, that's October. And we also had a pretty significant low here in September as well. As you can see there from my cursor, we had the bounce and then the final bounce into October. On a closing basis, on a monthly, September was lower than October as well. So we're looking at September, the price low came in October. So anyway, looking at that, 16 weeks, and we've been anticipating a top coming in soon. We were looking around here, 13 weeks, then we had another top at 15 weeks, and then we finally broke out and hit that at around 19 weeks. So it's probably likely that we were coming to the end of the move, even if you decided to sell out back in June. You really haven't seen the price go much further, so you didn't miss out on much, and the price basically came back and has tested those tops. We're expecting this might last a little bit longer, obviously based on the cycle analysis that we've seen here. To the downside, possibly 43, 50-ish, maybe even just 44. Maybe it doesn't go any lower than where it currently does and just continues to churn and chop around these levels. But either way, if we're just looking to single digits, which we've covered many times before because of history, looking back decades and decades, when you use, this is the futures chart, but when you use the SPX, you can go back decades in the bull market, especially out of a cycle low, especially after a bear market. These pullbacks typically aren't more than single digits, basically the double. You barely get to double-digit drawdowns, okay? A lot of people are waiting for drawdowns back to 41 because they're drawing lines here saying, well, there's the support and resistance, which isn't too wrong. You know, we're looking at support and resistance all the time, but then let's add in something extra to have our edge rather than just be part of the masses and the norms, hoping that the market goes down. Let's just use some of the data and our TA and our market sentiment to realize that the likelihood is that the market is only going to do a single digit, and if it is a single digit, back to our 50% level, probably somewhere around here at 43.50. That gives us a 6% drawdown. Potentially, if we go to these tops here at 4,200, there's 9.3. For the market to get further than 4,200, we got to get into the double digits, and the double digits don't happen that often. It was very, very rare. I think it was 1 out of 10 times. So it can happen. It's just that I would rather play the statistics on my side. And if I'm only seeing a 6 or 5 or whatever percent drawdown within these small single digits, then what am I going to do? Well, I would rather just wait it out. You know, I've made my moves to the upside because we looked at this cycle low. You remember that on the channel as we went back to June of 2022. We looked at September, October, and these lows here where we went in super heavy in March. I don't think these lows are going to come back. And so if it's only going to be a small drawdown here, you've got to be in the market expecting some pullback, and you have to look at your time frame because we are making the double-digit gains to the upside. So forget about the single digits to the downside. It ruins you as a trader to keep focusing on the day-to-day and these small pullbacks and all the fear that comes into the market. So we're looking at potential sideways move here, maybe for a couple of months, maybe a little bit longer, but we'll continue to update that as the market gives us new information along the way. Maybe this is it here, okay? But we are expecting this to be the current pullback, obviously based on some of the cycle analysis as well. So let's play it day by day, but not get focused on the 1 or the 0.5% moves that the market does. This is all flowing into what we're looking at with BTC as well. Some of the other data here. Okay, because this is obviously going to be helpful for this part of the cycle. We are looking at the S&P going to a new all-time high before Bitcoin does, and then the S&P going testing another all-time high as well, potentially around sometime later this year or in early 2024. Now, the last 10 pre-election years, 1983 to the previous one in 2019, It's the same cycle here. The market has moved up, so this is the right scale here, the blue. You can see the percentage move. The stock market from the beginning of the year is up about 20%, now having a small pullback. The historic data here is on the left scale, and the historic data shows as well. There's 12 and there's 6. There is the market pullback, approximately 6%. This is the low that we looked at on the S&P just about here, and there is your approximate 6% pullback. So it's all basically lining up as history shows, but we know the majority of people don't study history. They don't look at charts, they don't look at pricing, they don't look at data, or unfortunately, many interpret the data incorrectly, I would say. It's not the market that's wrong, it's the way that some people are interpreting it. We're not always going to be 100% right either, I'm not 100% right, but we're on the side of the trend more often than not. And that allows us to lever up our positions, whether we put more money into the market or take some out based on how we're currently seeing the cycle move. And that is our edge as traders. And that's how we make more money than others, because we know that unfortunately, 90% of people lose money in the markets. There is a popular maxim claiming that 90% of traders lose 90% of their money in the first 90 days, otherwise known as the 90-90-90 rule. Maybe you've heard it, maybe you haven't, but I just saw this come up and I thought that's a pretty good way to look at it. That's why I focus a lot on explaining some of the downfalls in the market and the crap that people look at that gets them lost, that gets them into losing positions. So it is a very tough game. Don't make any guesses about it. Even though that we've been on the right side for a very long time, it can be a very tough game for a lot of people. We just got to remove as much noise as possible and just focus on the facts and try to remove that emotion as well. The way that we do that is to have a solid set plan as well, something written down. Keep a journal, keep something that we can come back on. I know it takes a bit of work and it's annoying. I just want to make money from the market. I want to play on my apps and make trades, but it doesn't work like that. If you want to play that game, you will be part of the 90%. I don't want to be part of the 90%. I am part of the top 10% and more so the top 1% because I can actually make a living from this. And I want the same for you, which is why I keep talking about the same thing over and over again, because that's just part of the game. The game is pretty simple once you can get your head around it. The wall of worry just continues on time and time again. The last one we had was a US credit rating downgrade. And I mean, that's the current one going on, and that's why the market's probably chopping sideways. But when you look at cycles, it was bound to happen. It's just when we get to the timing, whatever bearish narrative sticks at that point in the timing, that's what we'll carry on. We'll have something else come up. There always is something else that comes up, of course, but we just have to be pretty wary of those sort of things that come up in the market. So that's your wall of worry. If you want to join us on Twitter, comment over there, follow along. We're getting pretty close to 80,000. So see if you can join us and make it 80,000 over there on Twitter. Now, on to BTC. That was a lot of background that I wanted to cover there for the markets, because that is pretty much what's going on. That's going to help the cycle of BTC. I think many of you are enjoying or at least appreciating the overall look at the markets, because at the end of the day, I'm not just a Bitcoin or crypto channel. I study the past to forecast the future. That's what I do day in, day out, looking at the macro cycles, stock markets, commodities, real estate cycle, which is my other primary investments as well. And of course, BTC and crypto is the easiest way, I think, to make money from the market, as it has the biggest beta for those returns to then pull out and use in what I like to invest in later on is real estate, which obviously helps the cycle progress. So looking at Bitcoin, there was a lot of people looking for that retest, the retest of the lows, retest of 25,000, retest of 20,000. I put this on the 6th, so 3 days ago. That was the comment that a lot were saying, I'm waiting on a test of blah, blah, blah. So I said, if you are ready for a retest of X dollars, whatever that might be, on Bitcoin or the stock market before you buy, you can bet everyone else is ready on that too, ready too, of course. Guess what that means? It typically means that we're probably not going to see those old prices, especially when we understand what stage of the cycle we're in, which is the macro uptrend. Bitcoin, maybe we come back and test them on Wix, so you'd have to have some of those orders there. But for the S&P, a lot of people are still waiting on these lows to be hit, 4,000. They think 38 is going to be hit. Some people even think it's going to go below the low, but a 24% drop. It's not impossible, but the likelihood is so far against you that it's why would you bet on that? Okay, so looking at this particular tweet. That's just like a mind game, understanding where our psychology is in the market before we move on to BTC. This is what I was looking at here. So just moving my face over. This is the average true range. So this is basically looking at the volatility in the market. And we were hitting some very, very low levels recently that would typically show that Bitcoin was about to experience some volatility, whether it was to the upside or to the downside. You can see these moves basically coincide with the range of the bars, and that typically brings the volatility. And because the volatility has been drying up, it's at one of the lowest levels we have seen since that cycle bottom, then we have to anticipate that we're going to see some extreme volatility. Could be to the downside. If it is, I think it's probably still short-lived based on the macro cycle, which now we're bringing back all the info that I went through at the beginning of the video about the S&P, that maybe we're just going to see this chop like we've seen in 95 years of history, which might not, here we go, which might not show that Bitcoin has to dump so much further. Maybe the S&P does 5, 3, 7%. Maybe Bitcoin does its 10%. From 29,000, that 10% basically brings it to 26. So it's still above the low that it put in June. Just throwing out some numbers there based on what we have currently seen. But what we have currently seen is a move up, 5.5%, nearly $1,600. And it looks like that we might actually get another test of the 50% level. So this is the short-term daily here. I've got the candles out for a lot of people who prefer candles. I learned on bars, but nonetheless, let's look at candles. We saw the move up. Here is a rejection, 30,169. Look at that, almost to the dollar. Okay, $222, 169, call it 170, $50, $53 difference in a span of a $30,000 asset is 0.2%, less than 0.2%. So it's hit our 50% dead on. Again, 50% level. Rejection. Are we going to overcome that? That is the next critical question. Short term, if we are able to overcome the 30,170 for a round number, call it 30,200, or if you like an easier round number, 30,500. Now we're just setting the bar extra high. But if we do start to consolidate above this level, that's going to be extra momentum to test that 31,800, or for another round number, 32,000. That is what the bulls are waiting on. Now, what we can see in the background with the S&P is it's probably still quiet time over this summer period. August, September, and then we start to get into that bigger push. So maybe we do test, but what you want to look out for is where does Bitcoin consolidate? Does it consolidate above the previous bottoms? And does it consolidate in the top 50%? It could get very boring again, but remember we are waiting for this average true range. That's what this reading is down the bottom here, ATR. That tells us that shows us when the volatility is dropping off. We might see the volatility drop off again after a particular spike, and that will fool a lot because they're waiting for a big breakout or they're waiting for a big breakdown. This is where we want to see the market hold up above that 30,000 level and start to consolidate. If we get another test lower, probably going to see lower prices because we've already tested these bottoms a couple of times. So probably in the next couple of days, let's hope that the market stays above this for the bulls at least. But if we want any sort of short-term lower prices, I'm not sure that we're going to get huge collapses back to previous lows. I don't think that's going to happen. I've said that many, many times before, but I understand a lot are sort of waiting for that. From the current prices, roughly 35% drop. It's not unheard of, but it's probably unlikely. To the previous low here at 24,700, so 24,007, it's about an 18% drop. That's a little more chance, of course, because it's less of a drop. But even then, we're sort of trying to hope that the market does go down. So what you want to look out for is, do we actually get a consolidation above these levels, maybe tests of these tops as well, and continue to consolidate as the volatility drops before we get a bigger pump later in the year. That's what all this is leading to. On top of that, so that's good news for the bulls at least. On top of that, it looks like we've seen another 200 weekly moving average kind of test. But even if we did grind lower, that number there, I know a lot of people look at it, $27,300, and the 50 week is $3,660. Eventually, it looks like we'll get that crossover, and that would be your golden cross, your mega golden cross here on the weekly here as the 50 comes back above the 200. So a lot of positive moves look like they're forming here for the bulls, but we just have to wait because of what we have seen with the rest of the market. This is typically the period of grinding and waiting. Note where some of those lows come in, so don't get spooked out if the market does come back and test some of those lows after we see some rallies. There will be some bad news there. It'll try and spook a lot of people out, but you are more in the know than the masses. So keep that in mind as well. Hit that like and subscribe button. Let's crush 290,000, and on Twitter, wherever I was there, let's see if we can crush 80,000 followers as well. Thanks once again, guys. We'll be back again for another video really, really soon. So don't go anywhere. And of course, links in the top of the video description for the trading competition there. If you are still around here at the end and you're new to the channel, check this link out here. This is our free Discord community, and you can get access to these channels, and you can look at TIA reviews as well. This is all the stuff that people have written about TIA, the programs, the trading courses, all the stuff here, especially on YouTube as well, our free content that you can get access to have a look at, see if it's something that you want to be a part of. All right, guys, thanks once again. See you at the next one. Till then, peace out. Adios.